In this video, I'm going to explain the initial balance breakout report from edgeful.com. So here we're looking at SPY and we're looking at the trailing 1 year. We have this standard report selected, the one that automatically loads when you pick this report. And this report's very, very simple. So all you need to know is what an initial balance is. So an initial balance is just the high and the low of the first hour of trading. So from 9:30 to 10:30 a.m. Eastern time. Whatever time zone you're in, it doesn't matter. It's just the first hour of market open. So you can see what this report measures is how often a single break occurs, a double break, or a no break. So I'll just go into what those are. So a single break is after 10:30, only one side of the initial balance is broken. So here is the high of the initial balance. Here is the low. You can see only one side was broken and it continued for the rest of the day until it closed. So only one side was broken. That happens 61% of the time. A double break is if it breaks the high and then comes all the way back down to break the low. That only happens 37% of the time. Then we have the no breaks. So that would be as if price formed the initial balance, so from here to here, and then stayed in this area for the rest of the day. Very unlikely to happen, only happens 1% of the time. So the way that you can use this report is to set the expectations of where price can go. So if it does break out above this initial balance, if it only breaks one side, maybe you don't want to target it for it to fully come back. Or here, I'll just try a different example here. If price is chopping around in here, it's likely not going to stay in there because that only happens 1% of the time in the last year. So you can take a trade expecting a break of either the high or the low. So that's how you can use this report, and I hope this helps. If you ever have any questions, please just reach out to our support, which is right here, or the email is hello@edgeful.com.